Good morning, this is Howie, and I'm here to help you win with money. This is a new month, new week, so I'm excited to bring you some new trades. Today is Monday, November 2nd. There is a landscaper cutting grass next door, so you may hear some other background noise during this video, but I wanted to do this live to show you a couple things that I want to do with my portfolio today. So let's start. I've been looking at my position. I had to update this spreadsheet here. So one of the things that I noticed is my SPYs. I want to create a new one, and I may pick whatever days available because this one is getting close to expiration. So I'm going to create a new one, maybe 39, 45, 48 days out or whatever it's available. Okay, so stay tuned and watch that. Normally we like to close it around 20 some odd days. So this one looks really good. It's in the midpoint. So we're going to create a new one here, and then we may do some other trades today. We just selected SPY. I'm going to do an Iron Condor. Let's see what dates are available. Okay, I changed the font of the screen so you can see it a little bit better. Here's what I'm thinking about first. I'm not sure yet. So here you can see I'm going to plug in some numbers here. 285 for the short put, 290. I'm sorry, 290 for the short put. Insurance is 285. I think I'm going to settle on a free 65, and then the insurance will be free 70, and I'll show you what that means. So what that puts me is 35. The width of the Iron Condor is a 75. I'm close. That means I'm tilting this closer to the upside, which means I'm giving a extra $5 movement to the downside based on today's price. I think the premium, based on what I see, is going to be about a hundred, and let's just do 110 right now, which is a little bit less than my go here of this here. And then so we'll just take a quick look. I want to see if I like it before I put the trade in. So I changed it to 2 contract because that's what I want to do. I'm okay with that. I think I'm just gonna, I'll show you what this means. Buying power. So you see that it's gonna take about $1,000 in buying power for me to reap the 225 today, and then they're gonna hold an additional 7, right? And that adds up to 1,000. You add the proceed plus this, they hold that. That's $1,000 in buying power, and that's how it normally works. So the risk reward, and did it go across already? No, not yet. There you go. So I still have it open. Let's see if we can get that across quickly. Here you go. I just lowered it a little bit. I'm paying $4 commission. I'm going to receive 220. Place another trade. And then there you go. You see it. It went across. And that will show up in my portfolio now. Okay. And I'll show you what I mean. I'll scroll down here. And there you go. You see my SPYs. So these should be good because today's an up day. Dow is sort of losing steam a little bit, but this is still early. This SPY on November 27. And then the new one I just created is right here. So the November 27 is this one here. You see that? It has 25 days. I just created a new one here for 46. So just for, let's see how much it will cost me to close today for the 25 days remaining. This is all on ETrade. Go to the November 27, just hit the close button. Normally what I like to do is just hit the position and toggle off 4 legs. This is an Iron Condor, and it will give you a really good, here you go. So about $71 to close, times free, because I have multiple contracts. And then let me just check what I paid for it. So if I close it for 71 or 75, oh, I don't know how accurate that is. I would need to check to see how much I got the last time I did this. So let me go check. Okay, I did some research. I originally opened the position here. I collected 152, and then the October 30, I end up rolling it into the November 27, which is over here. And you see I received a net credit of about $89. Okay, so you got to be cautious here. It doesn't mean, right? So I made a little bit of profit here. If you do the math, right, 152. And then you say, okay, well, I made profit here even during the row, right? So now, today, you got to look at it. The profit that I made here, it's really a continuation from this one. So it looks, I mean, it is fairly small. It's not a huge gain. So I can close this out. But it will, again, right, it means I made $20 on this one when I did row. And let's see the reason why we did this. When we did this row, you want to look at what I did. I moved it up in price, and I moved it, I moved it up $5 in strike price. So what happened was when we were doing this, S&P was moving towards the upper bound, and so we had to row to stay safe and give us some cushion. Obviously, between that month, things are now touching the lower bound, if that makes any sense. So based on that, because I still have 25 days into this trade left before it expires, which is this row here, and I mean there is some risk on the lower bound, so I opened it. So this is a hard one. I didn't make a lot of money, right? So I may want to wait. Do I want to wait a few more days? But if it, you see how where the midpoint is, it's actually under the midpoint, and it's still closer to my lower bound or the short put. And so there is some risk as this moves closer to the lower bound. Getting out of this trade may get harder, right? Because the premium prices on the put side will become more expensive, and it'll eat up all my profit. The only way I can get out of this over time is you need this thing to hover closer to the midpoint, right? So in any case, that's why I have other ones with lower midpoints, so that you're sort of offsetting it. So if it moves down on this one, it's actually, right, it's kind of weird, right? So the way that's why I'm laddering all these together, so that you're playing sort of slightly different strategy. So yes, in theory, sometimes the way it works is you lose a little bit of money here or you make less, but then the other ones sort of counterbalance it out. So we'll see what happens. I may just wait. As a bonus, I just rolled out another one. This is a cover call. I rolled it out for another 60 cents, but I also moved the strike price up. I added some more time. And the reason why is edit generally moves really fast on the upside, and I'm always catching up by doing rolling. So I rather collect the net profit or net credit now and move the strike price up and try to get ahead of the next run up. So I know it's weird. If you follow some of my videos, you'll see what I've been doing. Some of these things just move really fast, so sometimes it's better to just capture the profit now, because election is tomorrow. But if there's downside risk, I don't really care. Yes, I lose money on the underlying, but I'm making money on the option. So it's just positioning, it's hedging. You know, it's the income strategy that you're trying to do with cover calls. So Dave and Buster has been very volatile. And same thing here, you see this. I have a cash secure put at $16. Market been fluctuating. So I may want to get ahead of this one also. So I may just do, let's just try to throw one out there, and let's try to catch a 20 cents credit. If not, I'm okay with a 10 cents credit, because again, this is cash. It's a cash secure put. I'm going to lower it by $50, right? 50 cents is a $50 less cash in reserve for me. So let's try this first, and if not, we'll adjust it until the trade goes through. So we'll see what happens. Okay, it didn't go through. Let's go to 10, and I think this one may go through in a couple of seconds. So let's see what happens. Hit the refresh button. I'm trying to do a cover call on EA, and at 127, so you see it's 119 right now. It's a $7 move. This is a 25 delta. I may go a little bit safer. Earnings is coming out based on this on a Thursday, but the cover calls expires on a Friday. So you can see how there's going to be a lot of volatility. So there's a couple ways I can play this. I can do it with a 20 delta, and then on a Thursday, I may actually roll it out even before earnings to next week. I already reaped $1 profit or $100 regardless of the movement. And then if the price moves up between now and Thursday, I can roll up. If it moves down, I don't really have to do much. So we'll see. So you can see here, there's a little bit wide spread. We can try to grab the $1.50 here. I don't think it will happen. I think $1.40 may be a more accurate number here. Okay, and look what I end up doing. I did a rolling of a Iron Condor. So I moved it out and I moved it down on one piece. I did a cover call on Skechers. I did another cover call on EA here, and same thing with CVS. So I did a few moves, and I just want to update you. I'll show you the spreadsheet real quick. So here's what I end up doing with Apple. So my Apple here was $4 from being near the strike price. So what I end up doing was I moved it out. You see the date. I moved it from a 25 days to expiration to 46, and I moved it down. So what I did was I removed some of the downside risk, but in order for this to work, it cost me money to close this. So I had to narrow it a little bit. So I made the width a little bit more narrow, but it gave me a little bit more protection on the downside risk. Now, what that does mean is I do have some upside risk. If this thing moves up, right, $11, now I'm sort of back in the same position. But those are the risks with doing options, right? Sometimes you use one thing to pay for another thing. So I'll pop it over to here. So part of what you have to do in your portfolio is clean things up. So I did. This one I have an order to close this, but it didn't execute yet. This one I am taking the max loss because of the AMD buyout, and I shot right past the. Now the only thing I hope that I don't get early assignment. That would really stink, because that will cause a right. You got to come up with the cash, and I don't really want to own it, and that causes a violation of the Fed, whatever it is, Fed regulation FD or whatever that thing is called. So you can't have 4 violations in a year or whatever it is. But so that would really suck. I'm hoping to just let it expire. I'm willing to lose, right? It's $200 times the number of contracts. So I'm willing to take the max loss. But there's not much I can do here. I have to see, is it worth it for me to close it? But if I close it, it may actually cost me more than $400. So I have to see what happens. So that's all the moves I'm going to do for today. Hope you enjoyed this video. As always, please like and subscribe. It doesn't cost you any money to hit the like button. Doesn't even cost you any money to subscribe. Remember, there are people with millions of subscribers. They're not going to be hurting if you don't subscribe to their channel, but support all the content creators. If you like, you can buy some of the books in my affiliate link, or take a look at some of my Exposed by Math series. Those are a little bit longer videos, but I try to teach stuff that maybe you didn't know. I like to talk about some of the math behind why things are, and I try to explain it. Again, hopefully this week will be a good trading week. I know there's a lot of uncertainty because of elections, but have a good and profitable trading week, and let's do this together, $1 at a time. Bye-bye.